Yeah, we got a nice rally here, but we've got volatility whiplash, no doubt. While the SIBO S&P 500 Spot Volatility Index, it's called Spot Vol. What that one does is it tracks immediate market swings. We're looking at it right now. It's a little bit different from the actual VIX. It is falling about 13.6% to 24. Now, the more widely watched VIX gauges expected volatility over the next 30 days. The VIX and the S&P 500 tend to move in opposite directions. It's been not a good month for traders who tried to short the VIX. On April 7th, the index surged 60 points to its highest closing level since the COVID-19 pandemic. Of course, that was after the big trade attack by Donald Trump came in, the big tariff announcement, and just as the bond market was starting to really kind of swoon. So joining me now in a Fox Business exclusive is famed short seller, Citron Research founder Andrew Left, to explain why he betted against the VIX. And that was a painful trade. I'm looking, I don't see too many bruises on you, Andrew, but are you still long? Are you still short the VIX?
Yeah, I'm still short the VIX. Nice to see you. Not the same size as I was back when the market started to crash. At the time, the thesis was the VIX was at the highest level since COVID and the global financial crisis, and this was neither of the two. This was simply this was Trump announcing tariffs, people overshooting it. I thought the market was yes, the market was overbought. But as for the fear, it was something that was controllable. If you think about what we dealt with back in COVID, we don't know where we were going. So because this was controllable, I felt confident that the government, if it really got uncontrolled, the market would step in and calm the fears.
Okay, but that didn't work out. Are you at all in the money, or did you just get your shirt handed to you?
Oh no, I made money on the trade, and it's working out. It still is. It was a profitable trade. You know, what it was, the important part, Liz, I didn't think the market was going to necessarily go higher, and I didn't know how much lower it was going to go. I think our 3% moves, our 4% moves, those days are going to stop, and the market will set into new realities. When that happens, the VIX will go lower.
Okay, you think that the market actually is rational and figures out that it's overreacted? I hope you're right, because we have had one heck of a ride. Let's talk about why you think the VIX has been moving the way it has, and do you see any short-term sort of relaxation of this tightly wound VIX?
I think there will be a relaxation. Everybody wants an immediate rebound. We're probably not going to get it, and that's fine. The administration doesn't owe it to citizens to make sure the stock market goes up every week or every month, or even during every administration. It's a normal, healthy pullback. We've seen this. This is a pullback over tariffs. We had a 25% pullback over tariffs 3 years ago. So I don't know where the market's going to be in 2 years from now, in a year from now, or what particular stocks. I just thought the initial shock and awe reaction that we had, those 5% back-to-back day moves, that was not going to keep on happening. And eventually we'll say, okay, here are our new realities, and the government will adjust properly, which we're seeing happening right now. And that's why we see today the VIX is much lower.
Let's get to your brand new trades that you have just initiated. You are going actually long 3 names. Let us start with the first one. And I bring up this first one because, boy, this is interesting. This is First Solar. Have you ever owned a solar stock? I mean, you're going long this one, and of course, this comes on the heels of an announcement today by the Trump administration that they were slapping 3,000% plus tariffs on Chinese and Asian solar imports to the United States. That would obviously be bullish for solar, up 10%. When did you take this position?
I took the position when the tariff news came, thinking that they were going to be a direct beneficiary of it. It's weird, there's kind of delayed reaction that Wall Street had today. First Solar makes their solar products in the United States, services the United States, and yes, they've been in constant price wars with Asian manufacturers who are dropping prices. Now, true, they have sold out capacity right now, but this will give them better pricing power in the future. But I was expected, this is an industry that's needed, obviously solar for the data centers. So it was needed, and they could not compete the way they should be competing for solar. So they were a beneficiary. Most sell-side analysts have big expectations on First Solar. It's just weird when they came in today. that the stock reacted today.
Well, it's at $135.60. It has had a rough year to date, down 25%, year over year, down 30%. When would you exit it?
I mean, that's a tough one. So much is going to be dependent on that market related. So, it's everyone has to, what their own risk tolerance is, how long they want to hold it. The stock was much higher. Okay. I think most analyst firms have $200 targets on this or even higher. Doesn't mean I'd hold it till then. So, that's up to the personal investor.
Okay, up to the personal investor. Let's talk about your second new long position, Amazon. Amazon down 14% over the last month, ostensibly because it is exposed certainly to a lot of Chinese imports in its e-commerce side. But what do you like about it here?
It's funny, when Amazon was $235 or $240 not long ago, like 5 months ago, right, I kept saying, oh my God, I can't believe I don't own enough Amazon. I wish it would just go lower. And then it goes lower and you say, should I buy Amazon? You start questioning it. It is Amazon. Yes, as people, if the consumer gets stretched, they will still go to Amazon for cheaper prices. If you want to look for dynamic pricing, who'll be able to navigate their way through the tariffs the best through countries, it will be Amazon, no doubt, over other online competitors. Is it going to necessarily rebound back to 250 in the next year? I don't know. But when you have market turbulence, and I go to sleep at night knowing I own Amazon at $172 at one of the lowest PEs where it's been trading in the past, I think 8 years or 9 years, I like the stock right here. I mean, I don't think anyone, of all the Mag 7 stocks, this seems to be best positioned.
Yeah, and it's also very, very broad-based. It's got Amazon Workspace. It's got so many other businesses that can possibly at least be a little bit of Teflon.
They have businesses, their logistics business, and it goes on. And I think it's very important to understand, if you look at a certain item on my Amazon, they'll be able to navigate the tariff landscape better than their competitors through dynamic pricing. Mm-hmm. So you'll find cheaper prices for more favored countries.
Andrew, we've got a short amount of time left. This one is a real surprise to me, but you got to tell us, you are long China. You are long the FXI, which of course is an ETF that has a lot of Chinese stocks in it. Really, at this time, that's a gutsy move. Mm-hmm.
Actually, it's not. If you look at all the negative news that's come out in China the past few days or the past week with the U.S., and look how the market there has held in, it's been oversold for a while, China. There's a lot of catch-up in that stock market. The government has finally made a commitment in China to support their own market. They've never made that kind of commitment 2, 3, 4 years ago. Multiples in China are very low. It's a large economy, and hopefully, think of the catalyst of the potential trade deal with the U.S. Think of what could happen to this market that has had repressed pricing for so long.
Andrew, never a dull moment in your world. We love our long traders, we love our short traders, so we appreciate both sides of the perspective. It's a free market, and you're really at the forefront of it. Thank you very much.
Thank you.